You're getting fleeced. I don't care if your uncle bought gold in the 70s. I don't care if some YouTube guru told you silver is going to the moon. You're making the biggest mistake of your investing life, and you don't even know it. I'm Kevin O'Leary, Shark Tank. $20 billion in deals evaluated. I've seen every investment pitch, every scam, every shiny object that separates fools from their money. And right now, gold and silver are the shiniest trap in the market. Cold hard data doesn't lie. There's one fundamental rule being violated here, and it's costing you a fortune every single day. But before I tell you why you need to stop buying these metals immediately, you need to understand what's really happening in this market right now. Let me tell you what everyone is saying right now. Gold hit $4,118 an ounce in October 2025. That's a 68% gain for the year. Silver exploded even harder. 138% year to date. These are massive numbers, record-breaking numbers, and every talking head on television is screaming at you to buy more. JP Morgan is predicting $5,000 per ounce by the fourth quarter of 2026. Bank of America is calling for silver to hit $65. Analysts at IG are throwing around projections of $72, $88, maybe even higher if the gold-silver ratio compresses. The narrative is irresistible. Inflation is coming. The dollar is collapsing. Government debt is out of control. Geopolitical chaos in Venezuela, Russia, the Middle East. Central banks are hoarding gold like it's the last lifeboat on the Titanic. In 2025 alone, central banks bought $82 billion worth of gold-backed exchange-traded funds. $82 billion. That's real money chasing a shiny rock. And here's where it gets seductive. You look at your portfolio. Stocks are volatile, bonds are boring, real estate is illiquid, crypto feels like gambling, but gold and silver, they feel safe, they feel ancient, they feel like real wealth. You can hold them in your hand. They've been money for 5,000 years. Every civilization that ever existed valued these metals. So your brain tells you this is smart, this is protection, this is the move. I'm going to buy some gold coins, some silver bars, maybe allocate 10% of my portfolio to precious metals. I'm diversifying. I'm being responsible. I'm protecting myself against the next financial crisis. And that's exactly when I grab you by the collar and say, stop. Stop right there, because you're about to walk into a trap that will destroy your wealth for decades. You think you're being smart. You think you're being contrarian. You think you're protecting yourself, but you're actually volunteering to be poor. And I'm going to prove it to you with math, with data, and with the one investment principle that separates millionaires from broke people who think they're being clever. Here's my rule. You've heard me say this on Shark Tank 1,000 times. No dividend, no deal. If a company doesn't pay me a dividend, I don't invest. Period. End of story. I don't care how sexy the growth story is. I don't care how revolutionary the technology is. If you're not putting cash in my pocket every single quarter, you don't get my money. Why? Because dividends are proof. Proof that the company makes real profits. Proof that management is disciplined. Proof that shareholders actually matter. Dividends force accountability. A company can manipulate earnings. They can play games with stock buybacks. They can tell you fairy tales about future growth, but they cannot fake a dividend check. Either the cash is there or it isn't. Now let me ask you a question. What dividend does gold pay? Nothing. Zero. Zilch. You buy an ounce of gold today, what does it pay you next quarter? Not a penny. What about silver? Same answer. Nothing. You can sit there holding your precious metals for 10 years, 20 years, 30 years, and they will never put a single dollar of income into your account. They just sit there, inert, lifeless, hoping that someday someone will pay you more than you paid for them. That's not investing. That's speculation. That's gambling. You're betting on the greater fool theory. You're hoping some other sucker will come along and pay more than you did. That's not how wealth is built. Let me show you what you're giving up. Right now, you can buy dividend aristocrats, companies that have raised their dividends for 25 consecutive years or more. Johnson & Johnson, Procter & Gamble, Coca-Cola. These companies pay you 3%, 4%, sometimes 5% yields every quarter. Cash hits your account, not maybe, not hopefully, guaranteed. You own $100,000 of dividend stocks yielding 4%. You're collecting $4,000 a year in passive income. And here's the beautiful part. Those dividends grow. Every single year, These companies raise the dividend, 3%, 5%, 7% annual increases. Your income compounds. In 10 years, that $4,000 annual income becomes $6,000, $7,000, $8,000. And you still own the stock. The principal is still there, still growing, still paying you. Now compare that to gold. You invest $100,000 in gold. What's your income? Zero. Year 1, zero. Year 2, zero. Year 10, still zero. The only way you make money is if the price goes up. And if you need income, you have to sell some of your gold. You're liquidating your principal. You're eating your seed corn. That's not wealth building. That's wealth destruction. And don't give me this garbage about gold being a store of value. A store of value that pays you nothing is just the expensive paperweight. I can store value in a dividend stock and get paid while I wait. That's intelligent capital allocation. Gold is just hope in a shiny wrapper. The opportunity cost here is staggering. Every dollar you put into gold and silver is a dollar that's not earning dividends, not compounding, not building generational wealth. It's dead money. And in 2026, with the market offering you incredible dividend opportunities, choosing dead money is financial suicide. Let me destroy this gold fantasy with actual numbers. We're going to run a real comparison. January 1st, 2015 to December 31st, 2025, 10 years. You've got $100,000 to invest. Option A, you buy gold. Option B, you buy the S&P 500 Dividend Aristocrats Index. Let's see what happens. Gold. In January 2015, gold was trading around $1,200 per ounce. By December 2025, with this massive rally, gold is around $4,000 per ounce. That's a gain of roughly 233% over 10 years. Sounds great, right? Your $100,000 becomes $333,000. Not bad. But remember, you received zero income during those 10 years. Zero dividends, zero cash flow, nothing. You just sat there hoping the price would go up, and it did. Congratulations. You got lucky. Now let's look at option B, the Dividend Aristocrats. These companies had an average total return of approximately 14% annually over the same period when you include dividend reinvestment. Your $100,000 grows to about $370,000, already better than gold. But here's where it gets interesting. During those 10 years, you collected dividends, roughly 4% average yield. That's $4,000 a year in cash income. $40,000 total over 10 years. Money you could spend, money you could reinvest, money that hit your account like clockwork every single quarter. The gold investor got zero. You got $40,000 in cash flow plus a bigger ending balance. But wait, it gets worse for gold. Let's talk about taxes. When you sell your gold, you pay capital gains tax. But here's the kicker. The IRS classifies gold and silver as collectibles. You know what the tax rate is on collectibles? 28%. Not the 15 or 20% long-term capital gains rate you get on stocks. 28%. So your gold gains get hammered by taxes. Meanwhile, qualified dividends from stocks are taxed at the lower capital gains rate. 15 or 20% max, gold just lost again. And we haven't even talked about storage costs. You own physical gold and silver, you need to store it somewhere safe. A bank safe deposit box costs you $200 a year. A home safe costs $1,000. Professional vault storage can cost 0.5% of your holdings annually. Those costs add up. They eat into your returns. Dividend stocks cost you nothing to hold. They sit in your brokerage account for free. Actually better than free because they're paying you dividends while they sit there. Let's talk about liquidity. You need money fast. How easy is it to sell your gold? You've got to find a dealer. Get it appraised. Hope you don't get ripped off on the bid-ask spread. Dealers typically charge 3 to 5% over spot price when you buy and pay 3 to 5% under spot price when you sell. That's a 6 to 10% round trip cost. Brutal. Stocks? You hit sell on your phone and the money is in your account in 2 days at zero commission. And here's the final insult, inflation. Everyone buys gold to protect against inflation. But dividend stocks are actually better inflation hedges because the companies raise prices and grow earnings. Your dividends increase with inflation. Gold just sits there. It doesn't grow. It doesn't adapt. It doesn't innovate. It's a lump of metal. Companies are living organisms that adjust to economic conditions. They're dynamic. Gold is static. So when I add up all these factors, the math is absolutely brutal for gold and silver. Lower returns, zero income, higher taxes, storage costs, liquidity problems, worse inflation protection. Tell me again why you're buying gold? I'm waiting, because the math just murdered your argument. Now you're thinking, okay, Kevin, you've convinced me gold is a bad deal. So what should I buy instead? I'm glad you asked, because unlike these gold bugs who just want to sell you fear, I'm going to give you actionable alternatives that actually build wealth. We're talking about high-quality dividend growth stocks, companies that are recession-resistant, globally diversified, and have decades of dividend growth. This is where millionaires are actually putting their money in 2026. Let's start with the dividend aristocrats I mentioned earlier. These are S&P 500 companies that have raised dividends for at least 25 consecutive years. There are 64 of them right now. These companies survived the dot-com crash. They survived the 2008 financial crisis. They survived COVID. They survived everything, and they kept paying higher dividends every single year. That's the kind of reliability you want. Companies like Walmart, McDonald's, 3M, Target, Lowe's. These aren't speculative tech startups. These are boring, profitable, cash-generating machines, and boring is beautiful when you're building wealth. Right now, in late 2025, many of these aristocrats are yielding between 3 and 5%. That's real income. And remember, that income grows every year. Let's say you invest in a portfolio of dividend aristocrats yielding 4% with an average dividend growth rate of 6% annually. Your initial $100,000 investment pays you $4,000 in year 1. In year 5, it's paying you $5,300. In year 10, it's paying you $7,100. In year 20, it's paying you $13,500 per year, and you still own the stock. That's compound interest working for you. That's how you build generational wealth. But let's go deeper. I want you to think about sector diversification using dividend stocks, consumer staples, companies that make products people buy no matter what the economy is doing. Procter & Gamble makes Tide detergent and Crest toothpaste. You think people stop brushing their teeth in a recession? No. These companies have pricing power and stable demand. Healthcare, Johnson & Johnson, Abbott Laboratories, Pfizer, people get sick in good times and bad times. These companies have predictable revenue and strong margins. Utilities, Duke Energy, Southern Company. People need electricity every single day. Regulated monopolies with stable cash flows and fat dividends. You build a portfolio across these sectors, and you've got a dividend machine that's far more resilient than a pile of gold sitting in a vault doing nothing. And here's the secret weapon, dividend reinvestment. When you receive your dividends, you use that cash to buy more shares. Those shares generate more dividends, which buy more shares, which generate more dividends. It's a snowball that gets bigger every quarter without you doing anything. This is the eighth wonder of the world, according to Einstein, compound interest. Gold cannot compound, it just sits there. Stocks compound automatically if you reinvest the dividends. Now, some of you are saying, but Kevin, what if there's a market crash? What if stocks go down 50%? Good question. Here's my answer. If dividend stocks go down 50%, I'm buying more because the yield just doubled. When quality companies get cheaper, their dividend yields get higher. That's a buying opportunity, not a crisis. Meanwhile, if gold crashes 50%, it's still just a lump of metal paying you nothing. There's no income floor, no cash flow to cushion the fall. Just hope that it goes back up someday. I don't invest on hope, I invest on cash flow. And cash flow only comes from productive assets, assets that make things, sell things, innovate, grow, adapt. Companies are productive. Gold is not. End of discussion. Here's where the gold bugs are going to attack me. They'll say, Kevin, you don't understand. Gold is at $4,000 now, but it's going to $5,000, $6,000, maybe $10,000 per ounce. JP Morgan says so. The analysts say so. You're going to miss out on the biggest trade of the decade. And my response is simple. You're trying to time the market, and market timing is a loser's game. Let me tell you what happens with these parabolic moves. Gold has gone up 68% in 2025. Silver is up 138%. These are not normal returns. These are blow-off top returns. This is euphoria. This is speculation. This is the phase where taxi drivers are giving investment advice about precious metals. When everyone is talking about an investment, when it's on the cover of every magazine, when your neighbor who knows nothing about markets is suddenly an expert, that's not the beginning of the move, that's the end. I've been in markets for 40 years. I've seen this movie 100 times. Tech stocks in 2000, real estate in 2007, Bitcoin in 2017. The pattern is always the same. Massive gains, incredible hype. Everyone piles in at the top. Then reality hits. Prices collapse, and all those latecomers get slaughtered. The smart money made their gains years ago. They're selling to you right now. You're providing their exit liquidity. You're the sucker at the poker table who doesn't realize he's the sucker. And even if gold does go to 5,000 or 6,000, so what? You're still not getting paid while you wait. You're still hoping, still speculating, still violating every principle of intelligent investing. I would rather own a company yielding 4% that might go up 20% than own gold yielding 0% that might go up 50%. Why? Because I'm getting paid to wait. The dividend is my margin of safety. It's my downside protection. It's my proof that I own something real. Gold gives me none of that, just a prayer and a dream. So here's where we are. Gold and silver are at record highs. The hype is everywhere. The predictions are astronomical. And you're being told this is your last chance to get in. Don't fall for it. This is exactly the moment when disciplined investors walk away. This is when you say no thank you. This is when you stick to principles instead of chasing shiny objects. I want to be crystal clear. I am not saying gold has no place in investing. A small allocation, maybe 5% of your portfolio, as an insurance position against catastrophic events, fine. I get it. But that's not what people are doing right now. They're putting 20%, 30%, sometimes 50% of their portfolio into precious metals because they've been sold a story. A story about dollar collapse and government chaos and the end of the financial system. And stories don't pay dividends. Stories don't build wealth. Cash flow builds wealth. 2026 is going to be a year of reckoning. We have a strong dollar environment. We have potential interest rate changes. We have geopolitical risks, yes, but we always have geopolitical risks. The market has a way of humbling people who chase performance. The investors who get rich are the ones who buy productive assets when they're cheap and hold them forever while collecting income. The investors who stay poor are the ones who buy non-productive assets at peak prices and hope someone else will pay more. You have a choice right now. You can follow the crowd into gold and silver, you can speculate, you can hope, you can pray the price keeps going up, or you can invest like a professional. You can buy companies that pay you every quarter. You can build a dividend stream that grows every year. You can let compound interest do the heavy lifting. You can sleep well at night knowing your wealth is working for you, not just sitting in a vault collecting dust. I've made my position clear. No dividend, no deal. Gold and silver pay no dividends. Therefore, they don't get my money. And if you're serious about building wealth in 2026 and beyond, they shouldn't get yours either. Make the smart move. Skip the shiny objects. Buy the cash flow. Your future self will thank you.